Welcome back. Hope you're having a good morning. Well, plenty of stocks to discuss. We just ran you through the top 10 list. We also told you about market setup. So let's get to some fundamental analysis. Deepan Mehta, Director Lexar Equities, joins us on the show. Hi, Deepan. What do you make of this piece of news coming in on Bajaj Finance? Clearly, yesterday, the street sensed something. I'm not sure whether, this was it. But the stock saw a sharp fall at around 2 p.m. yesterday. We're looking at various brokerage notes, and they indicate maybe it's just a near-term hit. But what would you do? Would you be a buyer if it dips a little bit more from here?
Good morning, Nigel, and thank you for having me on your show. Yeah, a bit of a disappointing news, and I don't think it's going to have a material impact on the performance of the company, but certainly the sentiment may get sour for a few trading sessions or thereabout. We saw this something similar play out in the HDFC Bank case also, when actually they were banned from issuing any new credit cards, and that hit was even more damaging. So I think markets will get over this phenomena. And on the whole, I think Bajaj Finance has delivered better than street expectations, and corrections like this can certainly be used as good opportunities to get into a blue chip company like Bajaj Finance. But the real question in Nigel is that how much allocation you want to give to an NBFC stroke bank, because in what I'm seeing with a lot of investor portfolios, they're anyway overweight banks and NBFCs, and to buy some more of that, at these levels is something we need to be a bit cautious about.
Okay, so that's the take on Bajaj Finance. Deepan, hi, good morning. Yesterday we had this big move on Eicher Motors, 5%, right? In a market that was trending higher, no doubt about that. But what's your take? Do you expect this catch-up rally of sorts on Eicher to last? Would you be a participant, given earlier this year we were all talking about the heightened competition in that space?
Yeah, good morning, Surbi. Yeah, that's right. I think competition is a reality for Eicher, and they've accepted it. But they have their own plans in terms of exciting new range of models which is coming through. And I think they're going to unveil their electric vehicle strategy as well. But there are two disappointing aspects of Eicher Motors which I'd like to caution over here. One is that the actual volume in the domestic market, I think, is below our expectation at least, and we would have thought that given the effort put into distribution and into brand building, they would be able to sell more motorcycles, but that's not been the case. And the bigger disappointment is on the export side. When you look at the numbers month after month, exports are not growing the way they should be. And that's a huge opportunity for Eicher, but somehow it's not playing out. And that's something we need to track quite closely, because at some point of time, domestic competition will start to eat into volumes and market share. But when it comes to exports, there's kind of a blue ocean, market for Eicher. But why is it not growing as much as it should? Earlier, they had capacity constraints, but that's no longer the case today. And they've invested a lot in these export business per se, but it's not given adequate, I would say, return from our opinion. So let's wait and watch. I would not like to buy Eicher at these prices. Although as a measure of disclosure, we and our clients are invested in them. So at present, we are just keeping a kind of a hold strategy for Eicher Motors.
The other space, Deepan, hi, morning, we saw a fair bit of activity. Before we get to more mid-caps, etc., is IT services. TechM, Infy, LTI, Mindtree, you had TCS, Wipro, everything doing well. Any thoughts on this pack from here?
Yeah, good morning, Prashant. Not surprised at all. I think whenever US markets does well, Nasdaq does well, these stocks come back into reckoning. And the general consensus seems to be a soft landing for the US economy. And maybe a quarter or two down the line, we will see tech spending improve significantly. And that should certainly benefit the Indian IT services. There's also this entire AI wave, which can trigger higher tech spends and a lot of transformation on the part of the Fortune 500 companies. A lot of them are clients of IT services companies in India. So there's an opportunity there as well. And from an investor's perspective, these stocks are trading at very attractive valuations. They've created a great deal of value. They distribute profits. We saw TCS, I think, doing a buyback, a way of distributing profits to its shareholders. So these companies have been the darlings of the Indian stock market. But it's just that there are some stagnancy in earnings because of global macro factors. But if that is changing, then you will see a lot of interest coming back into IT stocks. Also, a lot of investors are underweight IT. And something similar what we saw play out in pharma maybe 3 or 4 quarters ago could play out in IT if you see an uptick in their performance or some positive commentary coming through from the leaders over there.
Well, Deepan Mehta is still with us. Deepan, you heard that conversation. If you want to weigh in there quickly, if you have a view on KRBL, go on.
Not really. I think this company been around for a long, long time, and in our opinion, hasn't performed to its true potential. I think rice and rice exports and branding, on the face of it, appear to have a huge opportunity. But there's a lot of volatility in their earnings, which is why the price to earning ratio also is pretty low for a company of this size and this nature of business. So from our perspective, it is an avoid.
We've, by the way, Deepan, just wanted to ask you, have you checked out this new listing, the NSDL, it's not the depository, but it's called Protean, which basically does a lot of back-end work for, all of the Aadhaar and other digital public infrastructure, which got listed 2 days back. It was up 20% yesterday. Have you given it a look?
No, not really. I'm generally avoiding all these new listings because there's so much of volatility, and price discovery usually takes place 2-3 quarters down the line. When things have settled down and we have seen 1 or 2 quarters or so, then we're able to judge the potential of the business. So from our perspective, that also is a company which is avoidable. Although I did feel that in terms of track record of financials, has not been as great as the valuations are reflected in the market. So it appears to be a bit overpriced, but I mean, this is not a high conviction call.
So Deepan, let's talk about, what else you could be looking at, considering the market has taken out several important levels, at least yesterday, and the going seems to be good. FIs have turned buyers. Fresh buy ideas. What comes to mind?
Oh,
Tough one, huh?
No, so as the earnings season starts to conclude, what we find is that the pharma companies have come out with an exceptional set of numbers. And there's this company, Kaplan Point. I heard their interview also on your TV channel. It's one of the outstanding performers in the pharma space and a very unique business model, or rather, I would say, unique market opportunity in Latin America, where they are leaders because they have built the brand and the distribution. So I think this company has got great prospects. Also, their nascent US business also scaling up pretty well in terms of the products that they are targeting, the oncology products. And it's a company which has excellent, I would say, capital allocation strategy as well. So very positive on this company. But again, a disclosure that we and our clients are invested in it. And even at these levels, we feel that there's good potential in the stock.
Okay, there is good potential in the stock. Deepan, any thoughts on rate gain? There is, of course, the QIP as well. But any thoughts? It's done well.
Prashant, you really have said it's a stock I regret missing out on. And I was tracking it since its listing, but for some reason or the other, never got into that company. But it's a great stock and a great story, especially when you're so bullish on travel and hospitality, and there are so few stocks to buy also within that space. I think RateGain certainly is a very unique company. And I don't know why they're doing a QIP, I think, but anyway, that's, promoters do take advantage of market conditions. But by and large, I think it's a solid performer. Only issue, of course, is its valuation. It is very richly valued. But the performance, the quarterly numbers have been exceptionally good. And the potential is immense because, they can keep on growing globally, not just in India. So it's a company worth monitoring and worth tracking. It's right on top in terms of our market watch. And at appropriate time, we look at, buying into this stock. But for the time being, I think it's best just wait and watch. Because I think there's not enough margin of safety if you buy at these levels.
Okay, all right. Deepan, I wanted to ask you about Religare. Yesterday the stock got pummeled actually. It was down close to around 5%. I think the street is a little bit nervous whether or not that open offer goes through. Though we had Mr. Burman who spoke to Prashant and he said that he's confident that they'll get the CCI approval. Now, if the approval comes through, actually, there's a bit of an arbitrage opportunity because the open offer is at 235. The stock ended at 211 yesterday. What's your view on the stock, on Religare? And how do you see this playing out with regard to the open offer?
See, Nigel, I don't think investors should try and take such arbitrage opportunities. There is so much happening in the market and there are so many sectors and investment themes which are playing out so well. Then why go for such arbitrage opportunities? It is just, capital getting blocked over there. Religare as a stock, have been tracking it closely, but generally troubled companies is what you need to avoid in the NBFC and the financial services space, There's so much of choice available at attractive valuations with fair degree of certainty and earning visibility. So I'd rather focus over there than a turnaround story like Rediger. And especially when there are so many controversies from an investor's perspective, it's best to avoid it.
Okay, that's a word on Religare. Lots going on. Deepan, we'll actually get into a chat with a power sector analyst in a bit, but I wanted your thoughts on it because, again, in terms of news announcements, I think there's a lot happening, the whole shift to renewables, and there's talk of adding more thermal power capacity as well. But the question is, stocks have run up and whether there is still enough left on the table. What do you think on that? And if you were to look at buying something in power, what would it be? Generation, transmission, distribution, what part of it?
See, within the power space, again, another company, not a recommendation, investors should do their own due diligence. We like APAR Industries. I mean, look at the way the numbers have come through for last several quarters or so. And it's not just a play on domestic power sector, but global as well. And what is happening in India is happening globally as well. I think more and more renewable energy requires more and more distribution that requires more conductors and transformers. And transformers require oil. So that's and cables as well. That's where APAR Industry is playing, and it's a solid player in terms of global standard and still available at attractive valuations. But there could be volatility in earnings because it is raw material intensive business. That's one company we like. But on the whole, within the power sector, I think we prefer to play on the transmission distribution side. Transformer companies, like a small company like Voltamp, if you see, came out with very impressive set of numbers. And again, they're a quality player, focuses more on the private sector than the public sector. So to that extent, their receivables are well under control and steadily increasing market share. And in some of the products which they have a dominant position as well. So I like to look for stories in the T&D sector. And that's where I think there could be value because power generation, the utility companies don't make sense to me because of low return on capital employed. And the equipment companies, I think, also because of the kind of order inflow and the volatility in the earnings, they're best to avoid. So T&D is the space to be in as far as power is concerned.
Okay, all right. Thanks a lot for that, Deepan.